Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Much for guys who've followed me for a long time in my when I spoke about order flow, and what I always would say to traders is that there are going to be points where if you're looking at the order book, you'll be able to see like a stack of orders, right? And that's usually what we would refer to as stops, or stops placed within the book. So usually in these areas you're going to find a lot of liquidity, right? And if you are a trader that wants to go long, you need to be able to find people that you can buy from, right? So in other words, people who are willing to sell to you. Now, if you have any sense of understanding in terms of human society, you know that people will not willingly give you things that are of value, right? So that means that you got to force them to do it. So because traders have different, what we call in the business, forcing points, right? So that's where their capital can't go to. Most traders, or rather I should say their capital can't stretch to. Most traders are going to be forced into putting hard stops in place, right? So what do I mean? I mean that if you buy an asset, you're going to have a sell stop loss to get out of that asset if the price goes to a certain area, because you just don't have enough money. This is a lot more common in the Forex market because it's a highly leveraged market, and a lot of people would max out that leverage, which means they've got a small area within which they can accept that they're wrong, right, before they got to get out of the trade, right? So this is important. So that means that anyone who was selling this market, for example here, right, so let me actually make this really big, because historically people have said to me, look, we're on mobiles, so we can't see anything when the screen is too small, right? So I'm going to make it really big, right? Big enough, of course, that you can see more or less all aspects of the screen, right? But you should be able to see what's going on here, right? So you can see up here that, okay, there were some sellers here, right? And the market's pushing lower, right? So above here, they're going to be naturally the people who are short, they're going to have their stops here. I'm going to assume, of course, these are the smartest guys who've been in early. They know what they're doing. They're going to have their stops here. So there's a lot of big money stops here. And what kind of stops are going to sit here? They're going to be buy stops. So if the market is going to access any kind of liquidity, it needs to go to those buy stops, because those buy stops that are sitting here are going to be where people are most likely to sell to people who want to buy, right? If they're buy stops here and I wanted to buy something, that's where I'm going to go, right? That's the best place to go, where I'm going to find an abundance of liquidity, for example, because people who are short here, they're going to have their buy stops here, right? So that's where they're going to be forced to get out of their position, right? So those short trades would need to be covered if prices were to trade roughly about 27.73. So this is an area of interest. Now, it's not an exact science, guys. I don't want anyone thinking that their stops are going to sit directly over here. It's not an exact science, and I'm going to show you guys proof. I'm going to explain this to you so that you can ultimately understand this fully by looking at a historical example, right? But for now, we're going to focus on the future. So we got buy stops here, and at the bottom here, we're going to have the reverse of that, right? We're going to have sell stops here, and that's going to force anyone in a long position to want to sell at that price. Okay, so that's the stop loss side. But what about the people who are going to put buy stops, who are looking for the market to go through here, so they get confirmation and then they go long at that price? So they're also, for example, we're going to have the buy stops in here being executed into trades to go long, right? So in addition to the stop losses. And then at the bottom here, we're going to have the same, we break structure. There's going to be a lot of sell stops here. So it stands to reason that whilst there's going to be a lot of liquidity across all price ranges, but there's going to be the most liquidity at the extremes, right? And we talk about this in Market Profile, right? So guys who followed me on my Market Profile videos, if you haven't seen them, check them out on the channel. You will know that we talk a lot about excess, right? And where liquidity is, value highs and value lows. So it's no different when you're looking at a candlestick chart. And I've decided to do a lot of my videos on candlestick charts. It's not because I don't want to continue showing you stuff on Market Profile. It's just that I've got a ton of videos on that. But people get very, very confused when they see a TPO chart, right? It's almost like I don't know what's going on. So I'm going to take that TPO chart and put it into a candlestick and speak in the terms so you don't have to stop trading with your candlesticks, but you can also see, you can digest some of the Market Profile concepts into the candlesticks, right? That's what I'm trying to do. So we know that the most liquidity is going to stay here and it's going to stay here, and then we're just going to have a bit of a churn. So this is generally what we call fair market prices, right? So this is all this mid-range, all the stuff that's going on here is going to be fair value. Now, of course, market prices are going to trade from value high to value low, so they're going to trade within fair value, but eventually they're going to go to outliers or extremes where there's going to be liquidity. Okay. Now, I'm sure some of you get this and are in total agreement, and I'm sure some of you are probably thinking about where they argue, where you've seen this before, and all kinds of other things. All right, so just going to go back here briefly, and let's look at the past couple of, actually, I'm not going to go too far back. Let me just make it as recent as possible. So let's look at the past recent days. What's happened?
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?